All right, everyone, welcome back for another episode of Carnivore Trades. Today is Tuesday, July 13, 2021. Market's getting a bit of a reversal intraday here as we enter the PM session. NASDAQ taking a hit, the hardest here, as yields had a nice spike intraday off the auction. If we pull this up here, the 10-minute chart of the 10-year. The Thinkorswim will bear with us for a second here. There we go. All right, yeah, so we had a nice spike in yields coming off of the lows. Again, I talked about this possibility bouncing in this range around the 0.382. I wish I could have gotten in a little bit. I was looking for a move a little bit lower. Now, I still think it could eventually come back and test this 1.2 area, so we may not have missed this trade. But right now, yield's getting a really good bid, and the dollar also getting a really good bid. So there's some warning signs going on here. With the dollar spiking like this, again, we talked about this yesterday with the dollar, how really every counter trend rally was faded pretty much immediately. You had this one attempt at consolidation, and then it took off, and it was faded immediately. But now it looks like the dollar trying to make a push higher, and it's got these higher lows in place now. So dollar's got a good chance of taking this area out, so we got to keep an eye on that. But I'm not too convinced here that we're quite at an inflection point yet. And the reason being, and I pointed this out on Twitter immediately, as soon as I saw the yield spike, I did a quick scan. Notice how JP Morgan, you're seeing the financial stocks here, XLF, getting a bid, XLE, catching a bid, although it's off of the highs, but it's catching a bid. So that's telling you that, yes, with the higher yield, it is causing some rotation, but that's just it. It's just rotation. Now, if we saw financials and energy dumping out and everything selling off, then I would be very concerned. I would be of the opinion that, hey, maybe this is a major top here. But when you see that money rotating, that tells you that everything's probably okay. This is probably just Opex games. Again, I said on Twitter, look, you got tech, look at the Qs here, triple Qs, how overbought they are over the last couple of weeks. So, the institutions needed some type of a story to get yields or to get tech to sell into Opex week. And, basically push all of those calls that everyone was buying and make them worthless and expire worthless by the end of the week. So, anytime you have a sector or a stock that's trading up like very overbought going into Opex, usually that's a sell signal for that week. For that same reason, that's why I picked up the Jets today. You guys know I've been talking about the airline stocks lately. I love this level here on the weekly. This is more of a weekly chart trade here. But yeah, so buying into that weakness there. Again, oversold short term going into Opex. I like it for a bounce this week. It might, might need to consolidate for a little bit here. It may need to play around. It might not get going until after Opex, but I'm expecting this. This is a really nice level here on the Jets, so this should be a good trade for us. Scanning through, let's take a look. Oh, speaking of Opex, notice AMC today. Market's about to close here, by the way, but notice AMC. So yesterday, we had a sell-off. Today we're selling off. Friday we sold, but they pumped it on Thursday. They got all the retail. This basically, as market's now closed here, but basically they pumped it here, got retail to FOMO in, and you know that they're greedy, so they probably bought calls that expire this Friday, which is just 1 week out from this Thursday, or this past Thursday. And then what do? Fade, fade, fade. So now all those calls are getting burned out, and all the retail investors that FOMO'd in and tried to stick it to the suits, they got their butts handed to them. So this is, you got to understand these games that the institutions play during Opex, and when you understand that, you can create some opportunities for yourself. Let's just take a look here at the spiders. Yeah, so closing down modestly, about 1/3%. So basically just giving back yesterday's gains, nothing too major. Again, when I see the financials holding up and actually getting a bid, and the energy getting a bid on the higher yield, that tells me that there's just rotation. It's not like a major concern, not yet anyway. So a stress, not yet. But if yields start to break back up and we push past that 1.6, and then we get up to that 1.7, that will freak the market out. So Gonna keep an eye on that. Let's see what else we have in news. So the Chinese stocks did well today. Tencent had a deal. They got approval for I think a search engine or something like that. Let's see what it was. Yeah, search engine developer Sogu was approved by Chinese anti-monopoly regulator. So they got some good news. Tencent up 5.5%. Joy Inc., which I'm in, up 7% today. And that's a nice little bounce off the lows. I told you guys I like that level. And IQ flattish to positive. I'm a little disappointed with IQ lately, but hopefully you can catch a bid on this news. So the Chinese stock's doing well today. Let's see if there's anything else I really want to point out. We had a nice rollover in Cloudflare yesterday. I'm still holding this short. Still have that sell signal. Got a little bit of follow through today, but I want to see it break through this pivot here and go down and attack this level. But it's been holding up really well. There's clearly a lot of money in this name, but with higher yields, you should expect some pressure on tech. Interestingly enough, if we look at the triple Qs here, we just put in a potential topping tail here on the daily chart. It's not a huge tail, and there's not a ton of volume behind it, but definitely a short-term bearish indicator. Although check this this trend line here. The triple Qs may want to go up and trade up to this trend line here before actually putting in some type of a pullback. It's very odd. Like what I talked yesterday about how gaps act like magnets. These levels sort of act like magnets too. The closer you get to them, it's almost like it has to go up there and touch it just to get it out of the way. So we'll see if the Qs can trade up into that range. I'll probably add to some QID in that position if we get there. Let's see, just scanning through everything else. Oh, one last thing, the VIX. Yeah, so this is interesting to me. Again, like I'm looking for maybe one last flush lower, but the way it's looking now, it's looking like we're starting to possibly do one of these where we break out of the falling wedge and then base. If we start basing for a few weeks, you look for the VIX to make another bigger move up. I think that, again, the closer we get to August, the closer this market gets to having a major correction. Like a lot of the cycles and the timing analysis that I've done really is lining up into like late July, mid-August, sometime around there. I think we're going to have some type of reversal. But typically it's not, we don't see major moves in the market during an Opex week. It's just the nature of things. So after that, we'll be a little bit more cautious, but for now, the markets probably will hold up. We do have the Fed talking tomorrow. I think Jay Powell is talking to Congress Wednesday and Thursday, so he's probably going to keep the markets afloat until then. So, but we will keep an eye on it. Anyways, I digress. You guys take care and have a great rest of your day.